Hello, guys, and welcome on our next discussion. I am Lubomir Valik. I am a teacher on Prague University of Economics and Business. And this talk is part of our practical seminar, Bitcoin and Blockchain. It is led on a Faculty of International Relations. And we have already streamed several discussions like this with different experts from crypto industry. So don't forget to check out the rest of the talks on our YouTube channel. And today we are live on a discussion with our valuable guests, Mr. Viktor Fischer and Dusan Kovacic. Viktor is head of blockchain fund at Rockaway, and that's one of the leading investment group in Central and Eastern European region. But I had to mention that their blockchain division has probably broader impact into the whole Europe. So we are really glad to having you guys here.
Thank you for the invitation.
And just small organizational stuff. The discussion will be led by our moderating team that is pre-selected from our students. We have chosen 2 students who will be discussing with you guys. You can already see them or her, the first moderator in Teams class meeting. But due to GDPR regulation, we will be streaming, or let's say capturing only your account, because we are not allowed to do so. So in case that our moderators would like to be seen on a stream as well, they are required to wear Guy Fawkes mask to not be recognized. Okay, guys, it's yours. Thanks for your time, and stage is yours.
So hello also from me. I would like to just few also organization stuff for the beginning. The discussion will be led by me and Percival, and we divided our discussion to 2 blocks. The first one will be focusing on DeFi, and the second one on investments and financial advisory. So, and in the end of each block, we will have 5 minutes for the question from our colleagues. Guys, if you have any question regarding the first part, the DeFi, and the second part, the investments, please put it in the Slido, which you will find in the chat in a while, I believe. So,
okay,
it's from me for the organization. And we can go to the questions, I believe. So, Viktor, you worked in McKinsey before you started in Rockaway. So, what was the reason for the change, and why did you decided to focus on DeFi or later on DeFi and create a division focus on DeFi rather than other investment products?
Yeah, so that's a good question. Hello, everyone. Again, thank you for the invitation. So I spent 5 years at McKinsey & Company, which my girlfriend said was way too long, yeah, because I was never at home. So we were basically flying out on Mondays and coming back on Thursdays. I was doing corporate finance practice, so all my clients were in Switzerland. And so we only had weekend relationships. Yeah, so that's number one. Number two, when you are at McKinsey, you are selling your time, and when you don't work, you are basically not having any income. Yeah, and so I felt like my time was not scalable. Yeah, of course you could charge maybe, I don't know, 100 euros, 1,000 euros, 5,000 euros per hour, but at one point there is a roof. Yeah, so. And of course, I love traveling. So I spent like, I don't know, 11 years in France, studied in Singapore, in the US. And whenever I traveled, I basically did not have any income. Yeah, at McKinsey, we called it, like unpaid leave. And I had way too many unpaid leaves. Yeah. So that was second reason. And third reason is I'm a teacher at heart. And so I really wanted to help like other entrepreneurs to build companies. Before McKinsey, I had my own startup, Innovatrix, which is still working in one of like IT firms in Slovakia. So I basically wanted to marry this entrepreneurial background with the consulting background and just help, young people create startups.
Nice, very nice. Okay, and when we get closer to DeFi,
Yeah.
I would like to ask you about the future, which you expect from it, because in the last months there has been a lot of discussion about DeFi and increased interest, especially from banks in cryptocurrencies and also DeFi. So, do you see any future or in a connection of this, like a decentralized finance and centralized finance?
Yeah, so I would say I'm still going to answer your first question. Yeah, is why then we created basically blockchain fund. And it was because investing in startups here in Central and Eastern Europe, it's a very small market. $150 million are invested per year. Yeah, it's a very small market. So, but in blockchain, $5 billion are invested per year. So of course it's global, so much more interesting, much more, related to travel. And lastly, so I am born still during communism. And during communism, we could not really travel to other countries. And so right now, I always fight for freedom. And blockchain, because it's decentralized, it basically gives freedom to financial services. Just like in the internet, you can from Prague read New York Times newspaper in the US. With blockchain, you can even from India connect to a DeFi service like I don't know, Mirror, which is a synthetic asset exchange on Terra protocol, and you can buy Apple stock without opening a bank account or without opening an account with interactive brokers, just with your smartphone and internet connection. And that's a huge revolution.
Mm-hmm. Okay.
And for your last question, DeFi, and I would also ask Dushan to jump here. Yeah, you guys know CoinGecko website, yeah? If you go on CoinGecko, you click the DeFi link in the main menu up there. You can see that DeFi market cap is $146 billion, and so it's basically only 5.6% of the overall crypto market cap. So it's really, really small. What worries me a little bit is people are more interested to talk about Dogecoin than to talk about Uniswap, and I still don't understand why. Yeah? People buy crypto because they use Revolut or Coinbase. Yeah, just last week, I looked at and I posted it on Twitter. I looked at the most bought cryptocurrencies through Revolut, and we have basically all shitcoins. Yeah, we'll have things like Ethereum Classic, because people say, hey, Ethereum is $4,000, Ethereum Classic is 148, so it must be something similar because it has like a similar name, and boom, they buy it.
Yeah, that's true.
So I think these kind of fintech companies are a bit responsible for the fact that, I speak daily with investors, institutional investors, traditional investors, and they still think, cryptocurrencies have no value, or their value is driven by speculation because of this bad PR by the media, and also because, retail investors are just speculating on price using services like Revolut.
Okay, and so if you communicate with your investors, or with investors investing in your fund, what do you recommend them then? What kind of funds? With some the project with some fundament, or anything which can rather drive their investments?
So can you repeat the question again? Sorry.
If you talk with your clients, what kind of project do you recommend them? Because usually in these projects, like Ethereum Classic, for example, and the Dogecoin, sadly, there can be
if I can jump here.
Yeah, Dushan, go ahead.
So if I can jump here, we do not recommend any project. Yeah, like we are a fund that invests on behalf of the investors, not recommend them what they are supposed to buy. And that is how the typical structure works. We are not financial advisors, and this is not a financial advice. What we are discussing here is actually not a recommendation on what to buy and what to not buy. And so I think that's like the key thing to understand, because Viktor is right. Like right now, like people are buying, the shitty assets, like the meme assets. I have never been really thinking that there is like a meme narrative that you can make money on, but obviously these are all wrong. But generally, these are not like a long-term, I would say, trends that you could like value invest in. Maybe for short-term speculation that could work, but not for a long term.
Yeah, definitely agree.
So in regards to the investments, we are using, the traditional models like discounted cash flow model and apply it into the crypto world. Like for example, there are assets like Uniswap or Sushipat token that either they will have a token or they will have cash flow to the token by now, or they will have it in the future, and you can discount the present value of that cash flow, assuming some assumptions.
So if I just for a minute share my screen, if you guys see it. So this is the analysis we just did on a Terra project. So disclaimer, this is not investment advice, and we are also investors in Terra. But this is we use a very traditional financial approach. First by evaluating market assumptions and based on current market size of stablecoins. Then we project Terra stablecoin supply based on a certain S-curve over the next 5 years, depending on how we think the adoption will grow. And then we model velocity, which is important for the valuation of the economy. And then we basically model the token economics, so how will the token be released in the future, and in the end we put all of it together in a discounted cash flow model. David Rakushan, our colleague, did this. So if you go on rbf.capital, you can see it here in the. Can you still see my screen? Yeah, I think you should be seeing. You can see it here in Learn, News. It's a bit hidden, but here if you click, you can basically download the full analysis as a PDF. Yeah, and behind the PDF is I'm gonna show now my Excel. Is a model like this, is an Excel model. Yeah, and we are happy to share with you if you want the Excel model where we have like inputs, what are we actually modeling, this is fundamental analysis. Then the stablecoin market, which is historicals, and we have some scenarios, and then the full calculation, which is basically using discounted cash flow over the next 5 years to value the asset, and then the results, where we see that if someone buys a token at $15 now, assuming that our assumptions are correct, in 5 years the selling price could be $170. So it's around 12 times invested capital. But again, not investment advice. We might be wrong.
Okay, that's very impressive. Okay, I wanted to ask about Terra like later on, but maybe I will go to this question, because when we started, it would be pity to leave it. So when we talking about Terra, do you think that its success depends on adoption of Luna or UST by the merchants, because they kind of rely on mass adoption of their stablecoin, but it doesn't have to happen, I think, or that's how I understand it.
I don't think so. It depends on like adoption by merchants. It was never intended to do so. More of like it was actually no. It was initially the idea was that Terra is a settlement layer for e-commerce transactions, but this has been like overtaken by the DeFi narrative and by the DeFi ecosystem. So the business model of Terra is they need to mint as many stablecoins as possible and keep them in the ecosystem. And they will do it by introducing all these products that actually keep the stablecoins in them, like lending borrowing platforms or derivative platforms or anything that actually somehow locks into stablecoins. So the success of Terra is a function of how many of these applications can be used and how well they can be integrated with existing financial service providers rather than merchants.
Mm-hmm. But one of the advantages of Terra is that there are like lower fees than is paid to credit cards, and also the transaction is kind of instant. But when the merchant want to switch their the stablecoin to normal to fiat, it isn't so adventurous, isn't it?
Of course, the fees are lower, and you're right. Like in Asia, the average fee is like 2.8 to 3%, while using Terra, they get like 1.5%. But typically, this use case is okay. It's a big use case, but when we are looking at like the use cases in terms of the size, the financial services use case is much bigger that the team is going for rather than the payment use case. Yeah. So it can eventually work, and it probably will by the increasing Chai adoption. But this will not be the key value driver for the price of Luna. And this is actually what we discovered together with David while doing the model. And so this is the outcome of the model. That whatever or the adoption of or by increasing acceptance of the stablecoin in merchants will not drive as much value as the financial services.
Yeah. So that's why we also changed our price target from $5 when we did the first analysis end of last year, when we were buying Luna tokens at 40 cents. We had a exit price potential at $5. But then we realized that actually it's not just a e-commerce play. Yeah, it's actually much broader than that, and it's a stablecoin play. And we think, depending on assumptions, that there might be 900 billion stablecoins out there 5 years from now, which is only 10x increase, which is much lower than it has been growing so far. And Luna will have, let's say, 20% market share, which is relatively small. And then with combining all of the fees coming through the chain, which would then accrue to Luna holders, we come with this potential price target.
Mm-hmm.
I think the question here is like how fast you guys believe that the virtual money, that the blockchain representation of dollars will actually grow in relation to the M2 money supply, because right now the M2 is around 4 trillion and all stablecoin is like 80 billion, which is like roughly 2%. But should be, I think like we are all for seeing like at least 20% of the dollars to be represented in blockchain like over 5 years. And if this materializes, if this assumption, then Luna seems to be like one of the better challenges, to compete in this space, especially in the Asian region. So like I think having this in portfolio is a good bet, into the winner of stablecoin market.
Mm-hmm. Okay, great. And at Terra, there is also possibility, as we already mentioned, to buy some synthetic stocks.
Mm-hmm.
How it is solved with the regulators? Because, for example, in Binance, there is a similar possibility, but it is known that there are some issues with the European regulators. So, do you know if Terra has solved this somehow?
Actually, we had a call with Dow just last week.
Dow is the CEO.
Dow is the founder and the CEO. And they pretty much are aware that in some regions it may cause trouble, but Terra is not officially marketing or like offering the products in Europe. So they are not under like scrutiny of the regulators. Eventually it will come, but in the meantime, they're like preparing on how to approach that.
Mm-hmm. Great.
Currently, their approach is saying that they are similar as Synthetics protocol, which is DeFi, so it's decentralized.
Mm-hmm. Okay.
And that's why, because decentralized, there is not one central entity which actually controls the system, so there is no one to be regulated. Very similar answer to Uniswap and others.
part of those personality is a little bit crypto anarchy, and like when you push him with this question, he will tell you, "I will burn all my admin keys, and there will be no way how anyone can stop this." But then eventually, this is not the way you want to go, but it's also a possibility.
Mhm. Okay. Yeah, that's true. That when there is still hasn't any right for. I think there is a right for what is it? Yields from the stocks and any decision right. So it's like a normal token. So it doesn't matter.
Yeah, there are no dividends because
Yeah.
it's a synthetic asset. Yeah.
Okay, and last question regarding Terra, and then we will get back to the centralized and decentralized finance. I read on in this analysis you shared that there is a threat from the Financial Action Task Force, and it's like a new proposal on some regulations. Do you think it can this can be harmful for Terra's operation in Western world?
Potentially, yes. We actually think it's potentially harmful to all DeFi services because DeFi services, by definition, have no AML KYC. And what does Financial Asset Task Force care about? They care about basically preventing money laundering. So in March 2021, this year, they issued a new guidance, and they're just giving guidance, and they are coming from G7, but then other countries really comply and implement as much as possible this guidance. So in July, they should come up with the final guidance to this. But in the preliminary report we have seen, they're actually saying indirectly that all the DeFi services are also exchanges. And because of that, they would fall under the AML KYC requirement. Now, meaning now DeFi services will have two options how to proceed. Number one option is actually only work with whitelisted addresses, which did have AML KYC, just like Enzyme. I think you guys had Enzyme protocol as an example. I saw it in syllabus. So Enzyme is actually working with whitelisted addresses, or Nexus Mutual, decentralized insurance. And when you want to be an LP, like a liquidity provider to decentralized insurance, you have to whitelist your address by submitting your ID card.
Okay. So we will see. Might be interesting.
Yeah, but I think think Uber. Yeah, Uber was also like going heavily against regulations. Yeah, and then in some countries, the taxis were really going against it. Yeah, think Paris, think London at one point of time. But I think, we are all startup entrepreneurs, and if you always want to, meaning that you have to be faster to the market in order to survive. Yeah, and sometimes regulations are always there to. Regulations are not there to prevent innovation. Yeah, they are more there to ensure basically three things: that people pay taxes. They are there to ensure that the retail investor is not, being screwed up by some offerings, and they are there to ensure that money is not laundered. Yeah.
So do you think there is a possibility that there will be more regulated subjects and less regulated subjects like operating next to each other, as we can see, for example, in a taxi services?
Yes, I think so. Just like in Texas, yeah. So if you live in Prague, you can see that we have Bolt and Uber right now, kind of everywhere, yeah. And they found a way how to basically license the drivers very quickly with a very like fast kind of approach. And now we have plenty of taxis which are not real taxis in Prague anymore, yeah. Which is good because I still remember 10 years ago when my friends from the UK paid 2,000 Czech crowns to go from the airport to the city center, which is like 10x the normal, not 10x, 8x the normal price. So I think right now the problem of regulation for DeFi is it's in the gray zone. Nobody knows, especially startups, how the regulations are going to apply, but the startup founders, they only have one objective or two objectives. Number one, have a successful startup. Number two, do not go in jail. Yeah. So they are not doing this in order, to kind of like go around the regulations. They are more doing this in order to make a successful startup. But what we are hearing from them is that they want to make sure that they do not go into jail, but either, very quickly decentralizing their network, although it's too early, just in order to kind of be on the safe side compared to AML KYC, or launching a token which is not really interesting because it does not have any utility, so that they are not seen as a security issuance.
Okay. So do you think that, for example, for some projects as Aave, because last week I read a report about ING, who proposed Aave as a kind of prosperous project for combination of centralized and decentralized finance. That it could be like its advantage and let's say USP. So do you see it in the same way, that it could be like one of the ways of future of DeFi?
Yeah, I think so, definitely. And Dushat, please jump in. But for me, DeFi and blockchain is automated back office for. Yeah. Dushko, can you please just mute?
Yeah, sorry.
So DeFi is just basically digitalized financial services. There was a report in 2020 which came out by McKinsey saying that if they compared Google, Microsoft, Amazon, Apple, like fully digitalized companies, only 30% of that was digitalization of financial services. And that's why, you have to wait 7 days for your money to go from Czech Republic to Argentina. It doesn't make sense. Everything's on the internet today. Yeah. So we think that DeFi is just automated rails, so automated back office for financial services. But we think the front office will still be kept, hopefully, by fintechs like Revolut or Robinhood. If not, then also by banks. Why not? Yeah, banks will still be kind of holding the relationships to customer, and they will make sure that they comply with AML KYC. But blockchain and DeFi is basically the protocol, just like HTTP is a protocol to exchange information over the internet. Aave will be a protocol for lending, borrowing on the internet.
Right. And if we imagine the situation that we have, let's say, middle-sized bank, which have some managing member who understands crypto and likes crypto, and want to operate with it and influence the bank. So the bank wants to offer its client the possibility to invest in it, in a DeFi. What should such a bank do in Czech Republic to make it happen? Should this wait for some regulation or try to somehow push it?
First of all, I think they should educate themselves. Yeah, we had a couple of discussions, meetings with some banks, and there is a lot to be educated on. And then and then we are happy to help them on the education side, and they just try some pilots. Yeah, I think Societe Generale has been trying to do some pilots. I think European Central Bank has issued that on Ethereum, if I recall correctly, reading an article about this. So I think then they should do just a small pilot and then choose. I think so. If you look at Aave or Compound, you get 8 or 10% interest rate per annum. My bank is Komerční banka. If I call them, they tell me, yeah, Viktor, you can get 0.01% interest rate per year. If they added Compound or Aave as a new financial product for their clients, I would use it through Komerční banka.
Mm-hmm. Right.
I think the board members should actually, leave and start the fintech startup by himself and raise some money and focus on the European region to build like a front office for DeFi for Europe. That is what he should do. Otherwise, it seems to be very difficult to transform like existing, especially Czech banks who are like a subsidiaries of typically like a larger bank from Europe. To convince them to start innovate, it's super difficult. At least this is what we have seen. So um, I find it kind of unrealistic to happen in the short future.
Okay, thank you very much.
And there is also another point, like Czech National Bank is not really like super friendly in terms of like innovation, so that might be another angle why they are actually scared.
That's unfortunately true. Okay, we have quite kind of a lot of questions from our colleagues, so I will ask them. And maybe let's start. Okay, I see some questions here. Our teacher is asking how to get the general population to invest in DeFi directly. He continues, I'm a little afraid that crypto in the hands of broader public will be mostly in custodies of big traditional financial institutions if there will not enough independent.
Not sure I understand, but so I would say, look, my parents, yeah, my father is a cryptography professor at ČVUT, yeah. He doesn't use DeFi. It's too complicated. And he's not amateur user. He's like a crypto expert, yeah. He can write algorithms, but he's not using DeFi. And if I tell him at home, he's like, yeah, but if there is a problem, it's actually also Dushan's dad who said the same thing. If there is a problem, who should I call? Yeah. So us, like I have similar age as you, like 20 something. I don't care having nobody to call because, we understand internet, like we were born with smartphones in hand and we are software programmers, yeah. Or we are, but so we understand that, it's okay if we don't have someone to call because we believe more in ourselves than in a government or a bank. But I think the older generation is different, but they are still majority of the population.
Okay.
I think what we actually need is the front office, as Viktor mentioned, like a person that actually knows how the local regulation works and can put together, like a business that actually just serves as like the customer suffer to the blockchain protocol. It is something to be figured out because like the transaction cannot be reversed, though they need to help somebody, the customers. But anyway, it will be up to the company to figure out.
The next question, what do you think about Cardano? Does it have potential or is it overhyped?
We think it's a pure example of total scam.
Well, poor African guys. Sorry.
There is nothing.
No,
there
I
is
would not
nothing
say
on
it's a scam.
It's a strong word, yeah, but
I think it's a market mispricing the real utility of the asset. Yeah, it's driven primarily by expectation of future profits, which are supposed to be by increasing adoption, but the adoption is coming. Yeah, but the market doesn't see it, so eventually it will normalize, but not now.
But Cardano is right now, it has a valuation of 56 billion. There is nothing running on Cardano. They've been saying that smart contracts are coming, since a long time ago.
Yeah.
So we don't really understand. I think some chains actually. Can I show you something? I'll show you something.
Sure.
Just 1 second. I have to find it in our Slack channel. Don't move, yeah. I'll show you something. Yeah, here it is. So please don't read other messages in our Slack channel. But this is really cool, yeah. This is actually how Cardano is sold in China to farmers. You can actually
Old-fashioned way.
you can actually Google it. Just 1 second, yeah. Yeah. So actually, I'm gonna change and share a different screen. Yeah, just 1 second. I'm gonna share my Twitter. This. Yeah. So, of course, if you don't have a product that works, we have to kind of promote it like this. And it's not our values to invest in projects which do PR but don't deliver on the tech.
Agree. The launch in and I'm not sure which state of Africa it was. I just forget it. But it was, I think, 2 weeks ago, and it wasn't really successful, or they didn't really introduce any project which makes sense. They introduced some like a book for school notes, but it doesn't have to be decentralized because it is centralized anyway. Because somehow someone has to put the notes in the system. So
yeah, unfortunately.
Second question is, how do you see Bitcoin?
Dusan?
Yeah, that's so Bitcoin is it's a religious asset, yeah. And the only way how to assume like the value of the Bitcoin in the future is to assume like how big the group of uh, people perceiving Bitcoin as the digital gold, either grows or decreases. And we are seeing the group growing, yeah. So there are like more and more capital which is represented by celebrities like Elon Musk or other jumping on board and buying Bitcoin. Also, they are buying some other stuff, but let's discuss Bitcoin. So we see the group is, growing, and I think like also like according to the SEC, Esther Pierce, the crypto mom, actually she's the SEC commissioner. We are fast, like banning Bitcoin. So it really seems the group of Bitcoin believers is just going to grow, and I don't see it stopping anytime soon. So I am very positive in the narrative of Bitcoin digital gold to reach mainstream and serve as an alternative to like gold industry.
Yeah, it is said that the Bitcoin is somehow basic, or should be the basic of each portfolio. So hopefully it will.
Yeah.
Okay, and the last question which I can see here, what do you think about IOTA?
I don't have any visibility on that project actually. It was supposed to be built on some new type of like blockchain that doesn't remember the past, like the directed acyclic graph. But I have not really seen any news or information that would somehow showcase traction of that platform.
Okay. And maybe if there is any other question, I would ask my last question and then pass the word to Percival. Do you think that the future of DeFi lies on Ethereum, or there will be another like a platform on which will DeFi works on or exist?
Dusan?
I think the future is multi-chain world. I have a hard time, seeing like being. Ethereum is probably the best platform for like high value transactions. Sorry, I am in a juice bar, so sometimes I have like people mixing juice here. So I will just sorry for that. Yeah.
Juice bar.
Anyway, yeah, it's a juice bar in Mexico. So So Ethereum is definitely like the cornerstone of DeFi, but the transaction fees, like as they are now, like paying 10 to 50 or $100 even for like simple transaction is not really sustainable for like new entrants. And it's okay for rich people, but majority of the world is not rich, yeah. And that is where these platforms when they are like lower value transactions could be made for cheap makes sense. And that's why I see Bitcoin as like the treasure when you have like a gold under the ground, like 100 meters. And that is how I see the security on when I have assets on Bitcoin. On Ethereum, it's like if you have it like treasure in the bank, yeah. And when you go to Solana, it's like having the assets in the wallet. Like you don't probably like have 100 million in your wallet when you go buy grocery stuff. So it all depends on like how you value security, and according to that perspective, you will choose the platform you want to operate on. And for some reasons, like low value transactions, like Solana or Terra will be probably the best or superior solution. While for transactions that require higher security, Ethereum will be probably the choice.
Mm-hmm. Okay, thank you very much. I would have tons of other questions, but I have to pass the word because we are running out of time. But thank you very much. It was very interesting, at least for me, but I believe for the rest of our group as well. So now there's a time for investments.
Okay, thank you very much, Christina, and also Viktor and Dusan for the answers. Right now, I'd like to focus a little bit more on the Rockaway Blockchain Fund. And well, Viktor, since the creation of this fund, it has been very profitable, and in its portfolio, you have some high-profile unicorns such as 1inch and the Solana blockchain systems. And my question is, what is the criteria that you use to identify promising projects to invest in and add to the fund's portfolio?
So let me correct you. It was not profitable since the beginning. It was actually initially like one big failure. Yeah, we started investing in 2018. We invested in Solana at 17 cents, like 200 million valuation or something like that. And like I was going to speak to investors, and they were like, "But Viktor, why are you, raising money? Bitcoin is dead, and blockchain has no use cases." And when this happened, Bitcoin was at 4,000. Yeah, when we were fundraising since Lucian knows, yeah. So end of 2018, 2019, we really pushed it. Took us until June 2020 to launch the fund. We actually sent to our investors, because then we had like 10 investors who said, okay, I'm going to put in something. So we had like $10 million, which were promised to us in February 2020. And then in March 2020, you know what happened, yeah? 12th of March, the Black Thursday, like all the markets went crashing down, and crypto and Bitcoin went like minus 50%, and traditional assets went like minus 33%. And I'm very grateful to our investors. Not many of them backed away. They said, we trust you, you can deliver. Some of them, reduced their commitment. So our first close initially was $6.55 million, yeah. Like so super small fund, yeah. And then at the end of 2020, we had 12 million fundraised, yeah. Bitcoin was at 20,000. And now we are at 100 million fundraised nearly in just a couple of months, because right now people start to understand when everything is high and expensive. Yeah, Dusan, anything to add?
Yeah, I mean, my feelings here are somehow the same as well. I mean, it's really about. So I think Viktor didn't actually answer the question. So I will try to answer it a little bit more in detail. Like, what is the key, in like reaching or investing into unicorns? And the key here is you need to be in a good market. If you are in a bad market, it's very difficult to make money. Yeah, and this is what we actually saw in like 2018. We were in the bad market. Like the valuations were low, the secondary market was low. But suddenly the market shifted, like blockchain is purely like as Viktor said, for example, DeFi is super autonomous. You don't need any people. Given the corona, people realize it can be a future finance, and they started to invest because like there are actually no people in DeFi. It's just a capital. It's just capital. Yeah? So what is the key here? So the key is to find teams that can deliver, that have some vision that typically like people from traditional finance in combination with super smart developers that have a vision on what they want to actually do and they can deliver on it. And this is actually not that difficult to recognize. You probably you want to see a commitment, you want to see the ability to form team and attract new talent. So the number one thing is market, and the second thing is team. Yeah, and even like if the initial idea is bad, a good team can iterate over it, and they can like or iterate fast and figure out what works and what doesn't, and eventually they will be a billion-dollar company or protocol.
And I would just summarize it, and we have it written on our whiteboard. 3 things we look at. So rockstar team, that's number one. Product which has traction. When we invested into 1inch, it was through a SAFT, so simple agreement for future tokens, like the blockchain was not released yet, the token, but they already had a product and significant traction, many people trading through them. And thirdly is a live and vibrant community. Community in their Discord, community in their Telegram, community on Twitter. You need those 3 things.
Okay, well, thank you very much for both. Maybe Dusan wants to add something?
Yeah, I'm just thinking, because when the project has everything that Viktor said, it's already a winner. Yeah, it's already a billion-dollar company. So the question is like, how do you like? You probably want to go earlier stage, or at least that was the question. At least this is how I interpret it. And yeah, like my answer would always be like the market number one and team number two, and everything else can be built later, or it will be built by the team. Yeah.
Well, thank you very much for your answers. And I would like to discuss a little bit more about these bad times, in the market. The market was suffering. And just like you mentioned, even though the market was bad, most of your investors choose to stay with you. And my question is, it's not just for crypto, but for like the overall. How did you approach these investors and try to explain them the situation and to convince them to stay, to keep their investment? Because like you mentioned before as well, there are a lot of bad PR from the media, and DeFi technologies are not exactly the easiest thing to understand and to put in practice. So how do you explain this to the investors?
So in the end, all of them said, we trust you. So it's all about trust. We've done some businesses before. They knew how we work. It was not linked to the fundamental underlying, potential of the blockchain. Of course, we always were explaining, it's automation of financial services. We showed some demos, back then, it was still clunky, like Terra was not really working and Ethereum was somewhat, but it was still slow. So, but of course they were listening to the market, but they basically just, in the end, just said, look, we trust you. Just go for it. So they invested into us.
No, thank you very much. And also,
they were betting on the team.
Yeah, they are betting on the team. Yeah.
All right. Thank you. And regarding
they also said if you screw up, don't go back to Prague.
So I would like to ask then a question about how exactly what is the qualified investor to get into the fund? And well, connected to this question, I would like to talk about specifically the Rockaway Blockchain Open-Ended Mutual Fund. And what is the correlation of this open-ended mutual fund with the main Rockaway Blockchain Fund? And this fund I saw as well that is managed by a third-party company called Amista, right? So what is exactly the role that Amista plays in managing the fund as well?
Yeah, so the big fund is taking a minimum $1 million, but for some people it's too big of an investment. Yeah. because let's say like nobody should invest into our fund more than, let's say, 5% of their kind of net worth, yeah, or liquid assets. So, you know, so 1 million divided by 5% is how much? It's 20 million, yeah. So we are looking for people in the big fund who have $20 million or more of like net worth, yeah, which is like 500 million Czech crowns, yeah. They're not so many, yeah. And so that's why, and we had some requests of people who wanted to like a smaller ticket. So then we got together with Amista, and they created a Czech entity which has only one objective, and is to basically invest into our big fund. And because they will pool all the smaller ticket sizes, they will for sure reach 1 million minimum. That's it. It's the only objective.
Okay, thank you. And also, staying in this topic, I also saw that the fees for this service are quite high for the first few years, and also that you have to maintain, correct me if I'm wrong, your investment for at least, I think, the first 5 years. So what's the reasoning behind this, why the fees are so high, and can it be also a problem when trying to attract investors to the fund?
You mean on the Amista fund?
Yes.
Yeah. So those are market standard fees, we are told, and it's 1.8% per annum. And we were told that it's market standard. Yeah. And it's basically half of this goes to the distribution network, and half of this goes to Amista for kind of administering and managing the fund. Yeah. And we said, like, we don't want any money of this. We just want, for like everybody to be happy and for like market prices. So nothing goes to us from this money. So, and we were told this is market standard. And secondly, the big fund is a 10-year fund. So actually, nobody who is investing into a big fund can get out before 10 years. So that's June 2030, unless we pay them back earlier. So we decide when we pay back. And this is a standard venture capital structure where it's actually the fund manager who decides when they sell a company, and that's when they pay back the investors. It's not that the investors are calling back their investment. And this is for another potential down market. Yeah. Could you hear me? Because I saw you could hear me, huh?
Yeah, it freezes a little bit, but
yeah.
We could hear you.
Okay, so because many funds in 2017 and 18, like Metastable, the fund of Naval Ravikant, if you know him, or FBG, the Asian fund, they were structured differently. They allowed to their investors to basically redeem the money.
Viktor, can you still hear us? I think you freezed. Christina, can you confirm that Viktor had some?
Yeah, I'm afraid that Viktor's network stopped working, but hopefully it will be fine in a minute.
Yes. Dushan, you still with us? Everything's fine? Maybe also Dushan lost the connection.
Our Rockaway team is very connected.
Yeah, maybe let's just wait a little bit until they can restore the connection.
Okay, I'm checking what's going on. I just wrote Viktor. So give me a second, please.
Sure.
So did Viktor also drop?
Yeah. Unfortunately.
Yes.
Because I dropped as well, and I thought it's my issue. So I don't know what the thing, because like Viktor is in Prague and I'm in Mexico. So. I don't
just
see
said
the
that you
Wi-Fi.
are. Yeah, I just said that you are incredibly connected.
Yeah, it was the same time basically.
Yeah, so Viktor just wrote me that there is probably some issue with internet connection, that he is plugged in with a cable, but he's trying to manage it somehow. So meantime, we still have here Dusan. So if you...
Yes, definitely. Dushan, I would like to ask you about something that I read in the Rockaway Blockchain website. Is that one of, in Viktor's opinion, I think one of the main use cases for DeFi would be insurance. And even before you mentioned the Nexus Mutual Fund or insurance company in London. So can you please explain a little bit more about how insurance works in the DeFi space?
So actually, like the only way how it works right now is the mutual structure, which is based on capital pooling, and then in a way that people decide themselves which risk do they want to underwrite. For example, Nexus Mutual has a capital pool of like, I don't know, like 100 or maybe even like something between 100 and 1 billion, depending on the Ethereum price, because it's Ethereum denominated, and they insure against like fairly of a smart contract. This was their first product. Right now, the product offering is more diverse, but let's call about the heck, yeah. So you insure yourself against a new set of risks, which is the heck of the smart contract, for example, of a compound protocol. And right now, the insurance platform by itself is offering their members, the members of the mutual, to underwrite compounds separately. So each of the insurers or each of the members decide on how much they want to underwrite the platform, and then they just put their stake in the mutual at risk. So if there is like an event, the people who are actually underwriting the risk are liquidated or have to pay for the claim first. And that is how the structure works. It's a marketplace. Yeah, there are people that want to buy, and there are people that want to underwrite the insurance. And it's like case by case basis. So that is the first approach. The second approach is like options based. So pretty much, if you can, for example, you have like this credit risk of Tether, yeah, like USDT, that it may lose spec. So you buy put options. Yeah, you can buy put options at a strike price $1 with expiry in a year, and that pretty much guarantees you that you will be paid $1 per 1 Tether anytime in the next year. So this put option insurance or this option-based insurance has never got traction in the space so far because it's somehow complicated. Yeah, you have these different strike prices and these different expiry dates, and the industry has not been able, to simplify it into the form where it would be accessible for a normal user. But eventually, we will probably get there, but not today. The other thing that is also interesting is if you are considering this options-based insurance, similarly, like Uniswap has invented the concept of like automated market maker. The same concept could be applied, like on options pricing, and that is another like layer on top of what has not been actually figured out on how to do that. Because if you had a pool, or if you were able to to buy an insurance from a pool on any time with a contract you specify, that would be actually super like great, exceptional, and like it would get like a lot of interest very fast. But this is a technological and economical problem that people have not been able to figure out yet. And the problem here is how do you make sure as a passive liquidity provider in this pool to generate deals? Because there is always some scenario that will actually misuse the protocol and trade the funds from the pool.
Well, thank you very much. I'm back, Viktor. I'm sorry that I had this problem with the connection. Viktor? Is he there? Or oh, please.
Yeah.
Oh, okay,
Yeah.
nice. So right now we're discussing with Dursha. He was explaining a little bit more about the insurance in the DeFi space. So maybe if you want to add something, or also even finish your reasoning of the last question when you got cut off.
Exit our companies and then we pay back. And it's because when in case there is another down market, we don't want our investors to redeem all the capital, then we would go bankrupt.
All right. Thank you very much for clarifying all these aspects of venture capital and investments as well. So I would like to right now actually take one of the questions that were sent about the audience. And the question is that if you think that, the summer with the release of the restrictions and the vaccination becoming, more common, would it affect in the people having more vacation time? Would it affect the crypto market in a good way, bad way? What do you think?
So I don't think there will be an impact. I think there will be an impact, but not linked to vacation time, but I think linked to inflation, yeah, because the economies are working better than expected, yeah. But the central banks are still using their monetary policy, and the politicians are still using, the fiscal policy to kind of, speed up the economy, which I think will result only in one thing. So the asset inflation has already been there. Yeah, look at the stocks over the past 2 years, plus 50%. Look at real estate, plus 15%. Yeah, we were in a recession last year, and still, like, all the assets are through the roof. And I think it's only a matter of time when inflation will kick in. As soon as the inflation also on the CPI, which is the consumer price index, which basically, Fed looks at and the central banks are looking at. For us, we think, for investors, it's irrelevant because you are only putting small amount of money of, what you are buying in Tesco store versus, the amount of money you are putting in other assets. So the asset inflation has already been there, a huge, unprecedented. It's only the matter of time when the CPI, so the retail inflation, will kick in. And that's when the Fed and central banks will start increasing interest rates. And of course, maybe there will be also, politicians who will kind of do a different turn in fiscal policies and introduce higher taxes. And that's when I think we will for sure see a slowdown in the growth, because there will be just much less money allocated by investors into all asset classes, including this one. And plus, there will be maybe other, potential interesting financial products, because if you have, interest rates at 5% given through the central bank, then, you can lend to a company at like 7%. And if you lend a company at 7%, starts to be interesting, yeah. So this is kind of my worry. And my main worry is that Fed will change this without giving heads up to investors. And you can already see how the markets are reacting, in a super volatile way. This Janet Yellen last time said something like, yeah, inflation is kicking in. Boom, financial markets went down, yeah, because people already kind of got scared that there will be less money. And of course, if the central bank interest rate is lower, that means that the U.S. Treasury bonds, which is used as in discounted cash flow model as basically the low risk investment, so discount rate also gets lower, which pumps up the asset prices. Yeah. Well, as soon as this changes, then discount, so the WACC, weighted average cost of equity, also changes, and then it's higher. So your discounted cash flow models are kind of then showing smaller prices for stocks. So then investors, are not as bullish anymore on the stocks, and then they go into different asset classes. So just to summarize, this is what I'm scared about. the macroeconomic situation much more than vacation time.
Okay, thank you very much for Dushan, please.
I think the vacation time will have impact on the TikTok investors, like what is happening, like what we started with like GameStop, now I feel like has translated to the crypto world in a way. Like we are seeing, the Dogecoin in like grow like 200x, and SafeMove and other assets that are actually endorsed by the TikTok investors. And I feel like these are guys who are like not very, they are probably not, I mean, they're bored, yeah. So they start to figure out some stuff, yeah. Like most of the stuff how you lose money is when you start trading or investing when you're bored. So I think, when there are people, getting realized maybe this new high cycle of, assets that do not have fundamental value will stop, but the quality assets, I don't think they will be affected at all.
Great. Actually, I would like to ask another thing about this market reactions. Do you think that in the long run, as the investors get more educated about DeFi, Bitcoin, and the blockchain technologies as a whole, they're going to be more careful in their investments, or, well, translating it, not going to hype like shit coins, like Dogecoin, and so on? What do you think?
No, no, and that the reason is because there is always new people that are getting on board. Right? So the people that actually got burned in 2017, like probably everybody on this call, including us, is not jumping to these pumps. But there are new, the people that just make some money, that make money by random, or they just want to play some game. And this streamline of new real people will always come in a cycle. They are like 1 in 3, 5 years. Maybe the cycle will be longer, but they will always be here.
Thank you very much. And I would like to ask another question from the audience, which is, what do you think about sovereign DeFi above Bitcoin?
You mean sovereign, the lending protocol? Is it the lending protocol that uses Bitcoin and works on the sidechain, or is it something else?
I don't. Well, it was a question for the audience.
Sovereign
so,
with
yeah.
SOVRYN.
SOVR. Yes, exactly.
YN. Yeah.
Yeah.
Yeah, Dushan, what do you think?
Actually, I don't have much information, but I believe it runs on the sidechain to Bitcoin. I'm not sure on which one, probably on the root code or something else. But don't quote me on that. I don't remember. Anyway, I'm not super bullish on this product because they are trying to mimic what already works on Ethereum with WBTC, and I don't really see any reason why. Why? Maybe it's just to please the Bitcoin maximalist narrative that they are not using Ethereum, but they are using some Bitcoin sidechain. But I don't really see any practical implication rather than satisfying some religious, thoughts. Anyway, I heard the valuation is quite high on secondary market. One of the partners from a fund perspective that we talked to regularly, I think they were just very happy on how the secondary market price actually looks like, which gave them like I think like 100x upside on their initial investment. So I would not recommend investing currently.
Well, thank you for your answer. And another question from the audience, which is, when you expect the first global players, the G7, to start using Bitcoin as a reserve asset in the central banks, and who do you think will be the lead?
Well, that's an interesting question. I mean, we don't have a crystal ball. I have absolutely no idea. Victor, do you have any idea? Or do you have any opinion about it?
No, I think, but just how I look in, like, who were the first Bitcoin kind of believers? Yeah, they were the programmers. Yeah, so Mark from Agoric, and and all these cypherpunks. Yeah, so the initial believers in Bitcoin were the anarchists who trusted more software code than government. Yeah. Right now, who are the believers of Bitcoin? On top of those, it's also hedge funds who want to hedge against inflation. So that's why, like Paul Tudor Jones, they're putting 1% of their assets under management into Bitcoin, because they understand it. We are software programmers, so we understand that there cannot be more than 21 million Bitcoins, and they are issued 6.25 of them every 10 minutes. So like we understand it. But when the central governments, like central banks, will understand it, I don't know. I think maybe like in generations. When there is a software programmer coming as a head of central bank versus, an economist. Sorry. I know we are talking to Fischer.
It's okay. Thank you very much for your insight. And right now, I would like to invite a member of our audience, which is Krzysztof. He wanted to ask a direct question. So please, Krzysztof.
Yeah, hi. Thank you once again for this nice interview. My question is regarding Uniswap and OneInch, because I've noticed that it's part of your project investment portfolio. And recently, Uniswap has revealed its third version, which is supposed to solve the capital efficiency and gas fees and stuff like that. So I would like to know if you have felt from your position as an investor increased demand regarding Uniswap and perhaps OneInch as well, and maybe what are the challenges of decentralized exchanges, and if this major change, which by many people has been seen as a great change or change to a better future, might place attention for more people and more new people, or it might be a crucial for possible new flow of investments in the ecosystem. Thank you. I know it's kind of a lot of questions, but
So I think it's kind of like a complex thing, so maybe we could talk about DEXs first. So DEXs by themselves, but actually these are there's a three change. It actually took the power away from people. And that is what we don't like about it. Because right now, if you are a liquidity provider in D3, you have to be, sophisticated. You have to be in the range where the assets are trading. It requires, like constant update, and given the fees are high, it will require like a high capital, amount to switch or to be worth switching. Then, while if you are looking at B2, you could be like, like a passive liquidity provider and generate yield on top of your assets. So I think it will not take away the capital that was there, though it will bring new capital from like the professional market makers to exist, which is quite interesting. And OneInch will benefit from it, because OneInch, the aggregator, always benefits when the market is scattered. Like before Uniswap B3, Uniswap B2 was like 55% of the market, which didn't give a lot of, there were a lot of reasons to use OneInch when you always get the best price on Uniswap. Right now, you have two platforms. And there is like Kyber and like OneInch liquidity protocol. So right now, like OneInch always benefits when there is like a more diverse set of DEXs. So that is our bet on this market when Uniswap will not perform. While our bet if Uniswap performs, it's all we have to do Uniswap. So like we are betting here, like we really want this market, we really want to capture this big market because we believe it will be huge. So with OneInch we take the angle of when the leader will lose the market share, go on direct Unibet, we take the bet when Uniswap will stay as the core player and leader will stay. Does it somehow answer your question?
yes, thank you very much for that.
Well, thank you, Krzysztof, for the question and also for the answer from Dusan and Viktor. I would like to mention a comment from Jakub in the chat. He said that he paid $320 USD for a single Uniswap transaction today. So I would like maybe to ask, when do you think these transaction fees are going to be lowered? It's going to take how many years do you think? It's going to be in the like in the midterm, or it's more for the long run?
It's actually true, yeah, Dusan. I don't know if you saw it, but the gas price is to 300 again, yeah.
Because it's a function of volatility, always.
Yeah.
The gas price will be always a function of volatility. If when the volatility cools down, it will be back to the numbers that we used to see. But in a highly volatile period, there is a lot of arbitrage opportunity, so it will be always taken. So I would not really, but you see, the spikes are lower. Like before that, it was like 1,200. Now it's 300. So I see it as an improvement, though. Like we still see there is a lot more to be done.
So thank you very much. Like to keep going with the questions. Sorry, Victor,
I have just a generic answer. I think the EIP 1559 could solve this, which should be part of the London release of the Ethereum network a bit later this year. We'll see. If not, there is always Solana or Terra.
I think there is also like a room to increase the block size again. Yeah, like if you are looking at the orphan block, I don't really see that they have changed a lot since like the increase to 15 million.
Yeah, from I think 12 or 12.5 million increase to 5 million block size. There is room to increase it even further.
Thank you very much. I see that Christina has her hand up. We want to make some comment or question.
Yeah, I maybe wanted to ask, what do you think about, I'm not sure if I pronounce it well, but I think it's Chiliz. It should work something as a parachain to Ethereum, and it should help it to scale the transaction. Do you think it is prosperous project, or it has some future?
What's the name?
Chiliz, I believe. I'm not.
Chiliz, CHILLIZ.
Yes.
That's some social token. No, it's not a scalability. So there are. Yeah.
It should work. It should work as a like a. I'm not really sure about the technical part of it, but as I read in the article and the CoinDesk, it should work something like Lightning Network on the Bitcoin. But maybe I understand it wrong.
Yeah, this one. Sharing this one. Chiliz. Sports and entertainment. Yeah. This one.
Yes.
Yeah, this is not a scalability solution. It's more like a social token. At least that's my understanding. Yeah. Link to sports.
Sorry, I just switched the two project I was reading about today. It was Matic, and it is Polygon. Sorry.
Yeah, Polygon. So I think there are several scalability solutions, and Dusan jump in. Yeah, I think. But for me, the biggest problem of a scalability solution from user perspective, it's as complex as using another chain. Yeah, you still have to go to, if you go on Terra today, Terra Station, you can access Terra network, you can access Ethereum network, you can access Binance Smart Chain network. One user interface. If you had a layer 2, would be exactly the same user experience. So I don't care from technology perspective which one is better. Optimistic rollups, zero knowledge proofs. I don't care. I look at user experience, and for me, user experience is the same whether it's an L2 or whether it's a new chain. So I have more tendency to believe in like different chains rather than L2 on top of Ethereum.
Okay, thank you very much. And there is another question from Krzysztof. So Krzysztof, go ahead.
Yeah, this question is to Viktor. So you have mentioned the EIP 1559, that you said it might be the solution. Again, I'm not really expert in this field. I don't really know much about that, but I read that it might actually kill mining in a way that this will lead to a significant drop in miners' revenue. So maybe do you think, or what do you think will be the solution of EIP, or how it will be solved?
Of course, it will not kill mining, if I may jump here, because it will just turn the revenues from the fees, which are right now maybe 30 to 50% of the block rewards, but even the block rewards themselves are huge. So you can see the split, and you can just calculate on how much the miners actually makes a day, and like take like maybe 30% away from it, and you will actually see like right now they make so much money. So like they are crying on I think on a bad front here, because right now doing mining operation is super profitable.
Yeah, you're right. Thanks.
Thank you very much. I would just like to jump in and ask our seminar teacher, Lubo, if we still have a few more minutes to go, because we still have a couple more interesting questions. So if we can have a few minutes more, Lubo, please.
Yeah, it's on our guests. So if they have few more minutes, then we can continue. So it's on you guys.
So is it okay for you, Viktor and Dusan?
Yeah. I still have some work, so let's do a couple of more minutes. And Dusan was flying overnight, so unless he falls asleep.
I need to run, guys. So unfortunately, but anyway, if you need some question, if you want some question or want to have some like more debate, just drop me a message on Twitter. My ID is Duskovaci, or just drop me a message on Telegram. My ID is KDusan. Yeah, and you can discuss whatever you guys like. So apologies for my connection today, but it was a pleasure to meeting you. And so
okay.
if you guys want to get in touch, feel free to do it.
No, thank you very much
for connecting.
Thank you very much for your participation. So it's just a couple more questions, Viktor. And this one is from Jakub. What do you think about the centralized crypto lending platforms such as Celsius?
So Celsius, last time I looked, was giving 13%. And I think I'm okay with their approach. We know the CEO, Alex, but one has to be okay with also the risk that they are taking, because they are doing much more than just DeFi borrowing lending platform. DeFi borrowing lending platform is basically lending through a pool, and the one who is borrowing from you is basically using a collateral at the level of 150% on whatever they are borrowing from the pool. Celsius is not doing that. Celsius is allocating their capital to different market makers, funds, and also exchanges. So it's a more risky platform. That's why they are giving a higher interest rate.
Thank you very much for your answer, Viktor. And I think that's all for us. And I'd like to thank you for your time. So if you have any considerations and anything else you would like to add, please feel free.
Yeah, thank you so much. And I'm actually very, very happy that we have a blockchain course like this, because we look like Stanford has a blockchain Center for Blockchain Excellence, and Berkeley also is teaching courses in blockchain. And I think we are lacking, blockchain enthusiasts and developers, particularly in this region. But I think it can really help our countries become like 30 years ago. We were really good at antivirus. That's when Avast and AVG and ESET were created. And I think, Czechs and Slovaks and even Europeans, Percival. so could jump on this technology and make us, more visible globally.
No, thank you very much for your time. And we also appreciate all the valuable information and insights that you shared with us today. So thank you very much.
Yeah, thank you very much. It was awesome.
Yeah, it was really great. Thank you, Viktor, also from my side for joining us, and hopefully maybe in the next semester or somewhere later on.
Thank you so much. Good stuff. Yeah. Thank you. Bye-bye.
Bye.
No, thank you very much, guys. I think that's it.
Thank you. I hope you enjoy it.
Yes.
So let's write a test.
Yeah. Well, good luck for everybody.
Good luck.